Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Wednesday afternoon. I'm Juliette Sarley. Great to have your company on what we might call a bit of a golden Wednesday. We've seen a return to gold stocks, in fact, a return in general to mining stocks, a lot of momentum in copper as well. So with copper at its highest price in more than a month and that rebound in gold, we have seen a really solid momentum coming through in the materials sector. Let's have a look at where the CBO 200 is finishing the day's trade. It is there firmer by 0.4%, while I'll get you a check of the S&P ASX 200, which is also tracking higher. It is firmer by about 1/3%, heading into close 8,815. So for those that love those psychological levels, we're back above 8,800 points. And yes, definitely the materials sector is the front runner today, up by some 2.3%. Energy also looking good. A bit of a switch out of defensive healthcare, IT, consumer discretionary, and pretty much every other sector. So it was the miners and energy stocks that managed to lead us higher today. Let's get into the themes of the day, because we often call Wednesday hump day. We are over the hump, and we also have advanced for the day's trade. Some yen woes though, when we look at Japan, the yen sliding past 163 to the dollar to mark a fresh 4-decade low against the US dollar. So did somebody say BOJ intervention? We're certainly on watch for that. And tariff Trump again, with US President Trump preparing new levies to replace the ones that were put in place after the Supreme Court gutted his trade agenda. A lot to watch out for, of course, in the overnight session. Let's have a look at some of those copper players, with the price of the red metal at that 1-month high. Capstone Copper up 4.3%, Ramelius Resources up more than 9%. I mentioned that energy stocks also doing well today. If we flip the board, Santos, Woodside. Now, Santos is going to be out with a quarterly update tomorrow, as is Karoon. Karoon shares up by an impressive 4.5%. Ampol and Beach Energy also looking good. While, as I mentioned, the healthcare stocks did come under pressure today. I had a really great conversation with Jovana Gagic from Paradise Investment Management today. Her sort of inaugural debut, or her debut on AusBiz. She has been on once before. You'll remember I hosted that panel with Market Matters, and she was on that, and we played that out on AusBiz. But in terms of her first appearance here in the studio, she did great. We're going to have her on a lot more, and she had some really interesting picks there in the healthcare sector that we were just looking at there, with ResMed, of course, on her radar. Fisher & Paykel she was looking at as well, Telix Pharmaceuticals as well. Let's have a look at some of the corporate stories. West Farmers there, and its Chilean joint venture partner committing to $1.4 billion to expand their lithium project. Origin Energy also there. It was lower. It investigated a potential security incident. We saw Lynas lower after its Malaysian heavy rare earths expansion, it said, would cost about $294 million. And Paladin higher after forecasting increased uranium production from its Langer Heinrich mine in full year 27. Elsewhere, Sky City Entertainment had a good session, up by more than 13%, agreeing to sell Auckland's Grand Hotel. Proceeds here used to be repaying debt and strengthen its overall balance sheet. And Dusk, not one we talk about it that much, but the ACCC there launching legal proceedings over allegedly non-compliant batteries in 25 products. But one of the big stories was WiseTech today. Now, WiseTech agreed to acquire the AI supply chain firm FRDM.ai in a deal worth up to $24 million. Now, FRDM basically maps supplier networks far beyond a company's direct suppliers. It monitors them in real time, so it can flag risks like geopolitical tensions, natural disasters, potential human rights issues before they disrupt the movement of goods. So we spoke to our experts, Andrew Weiland from DP Wealth Advisory, Henry Jennings from Marcus Today, for their take on WiseTech.
WiseTech's no stranger to acquisitions, and it was at one stage it was doing one a day, I think, when it was first kicked off on the ASX, and rapidly grew. But it has since, and when you look at the chart, you can look at the chart there, of course, it has had an almighty fall from grace. Now, some of that, of course, is due to the sector, But a lot of that is also due to corporate governance with the Richard White issues that continue to plague and feed front pages.
I'm sort of not really sold, I'm sorry. Last time we looked at this, the three amigos, the three of us, the PE, price earnings ratio, was 79 times earnings. We're now back at 22 times. So, we're certainly moving back towards reality.
Almost at match off now. Let's get a take though of the day that was, and welcome to the COB, Mark Gardner from MPC Markets. Mark, we just played the experts on the calls guest today view on WiseTech. What do you think about this sort of push into AI, particularly after they just got rid of quite a lot of jobs as well?
Well, I think that's the whole point, really. I mean, they can afford to get rid of those jobs because they're effectively using AI. And look, they've got governance problems, fair enough. But I think they're one of the top candidates, like the likes of Technology One, to actually harness AI, pick up those productivity gains before the rest of before the other companies, and become more efficient and increase margins. So I think once these governance issues are in the rearview mirror, I have no fears, and our investors in WiseTech have no fears about the chairman or Richard White leaving. The company's now, it's been around a long time. The guy, the CEO at the moment, has been there 15 years by his side. I don't think there's any founder risk, and I think it has a moat with those large enterprises and that logistics. So I think it's just a matter of waiting this out as it stands, and letting them do their thing. They've always been a great tech company. What goes on in the background is kind of is different to that.
Yeah, absolutely. All right, well, it was kind of light on, you and I have talked about this a lot. We're sort of in that weird period before reporting season, not a lot coming out. But the Wesfarmers piece was interesting, the sort of doubling down on lithium. What did you make of that?
Yeah, I think they've been quite timely, and obviously for investors, lithium has been quite volatile. But one thing you'll notice is that every time it dips, someone like Wesfarmers or Rio comes out and buys in. And these guys aren't stupid. Like, they know that there's long-term demand. They know it's going to be around. And all of these, the threats of sodium batteries and et cetera, everyone's sort of, the infrastructure is so built out now. I think you'll have that constant dip buying, and I think this is one of the things that, whilst the chip stocks have rocketed in the States and things like that, these critical minerals were a big deal towards the start of this year, and I think they're looking very underpriced at the moment, and this is kind of like private equity stepping into some of the the underpriced mid caps in the Australian on the ASX. It's just they know where the value is, and they know where the long term value is, and they're very good at controlling their costs and their margins. So I think it just sort of signals that that those critical minerals, and particularly lithium, are probably trading a little bit cheap at the minute.
What isn't trading cheap are some of these tech names. Busy week in the US. Tell us what's on your radar. We've obviously been waiting for some of the big ones, Alphabet and Tesla tonight.
Yeah, look, they'll be two of the better ones in terms of the capex, I'd imagine, because Elon's probably one of the greater commercial engineers of all time. Google's hasn't really been paying up and doing a lot of their own inference chips, etc. But there's still I think EPS and revenue will be largely ignored, and I think that they're absolutely laser focused on capex. Tesla may see an uplift in vehicles and things like that, and just on the back of oil prices being elevated. But I think the real risk is next week. And as I said in the wrote in the newsletter yesterday, we're looking at things like iron, which was up 20% in the last couple of days. We've recently bought into some SK Hynix after the ADR. It was up 14% last night. They're trading at forward PEs of 6. So you want to be in the ones receiving the checks, not the ones spending the money, I think, at the moment. And I think that trend will probably continue for earnings for the rest of the year, because, the risk is that, the index may fall away because these hyperscalers are such a concentrated weighting of the indexes, but it doesn't mean that, the likes of Micron or these data center as a service like Nebius or Iron, etc., won't continue to make money. So it's very much a stock pickers market, and you want to stay in the things that have got a tailwind.
Yeah, it's the picks and shovels, the ones that are going to get the money in the end of the day, isn't it? All right, anything else on your radar? I mentioned we've got a few sort of more quarterly updates tomorrow. Santos Macquarie, I think, holding its AGM.
Yeah, look, I mean, Macquarie usually does pretty well. Santos has enjoyed higher prices. Sort of approaching this earnings season from the point of view, we'll probably react after the point, just because the price action punished to the downside but didn't really reward to the upside for the last few earnings seasons. And there's been great opportunities when the market has gone a little bit over the top and sold things off, or when they've been a bit disappointed. But I think there's some decent value out there on the ASX for sure, and I would expect a decent rebound. I mean, we're not talking about stocks that are at 100 PEs and growing revenue at 100% every quarter. I think there's some genuinely undervalued companies across the board that that will get they'll put in an ever reliable earnings report, and they'll start to go back to the levels they were.
All right, Mark, we'll leave you to it. I'm sure you'll be up early watching, or not going to bed, just watching all that fun action on Wall Street. We'll see you again soon. Thank you so much, Mark Gardner there from MPC Markets. Well, the market has closed now. Let's have a look at where we have finished the day's trade. That's some of the leaders in the session. Firefly Metals up by more than 6%. Hyperion X, or Abandoned Mining, Paladin Energy and Hub24 coming back after yesterday being sold off. Today we saw weakness, though, as we mentioned, in those healthcare stocks. Kind of normal when you do see a bit of a switch out of defensive healthcare players sometimes. Lynas looking a little bit worse for wear after its update. Tech One, Monadelphous there too. Let's look at the small end of town. Mastermind had a good session, up by more than 33%, while the laggards today included Peninsula Energy and Mika Metals. All right, well, we mentioned tonight there are going to be some big earnings coming through, including Alphabet and Tesla. Also, US crude oil inventories giving us a bit of a checkpoint as to where we're at as the disruption in the Middle East continues. And tomorrow, locally, we've got jobs data, which is very much the key one. So we also get quarterly updates from Fortescue, Karoon Energy, Sandfire Resources and Santos, while Macquarie Group will actually hold its AGM. Let's see where the local market has finished the day's trade. Firmer there by 0.4%. The S&P ASX 200 up 30 points, or 1/3% to 8,823, crossing back above its 20-day moving average, and unchanged over the week, currently about 4% off all-time highs. That does it for this Wednesday. We'll be back bright and early from 9:45 a.m. Eastern. We'll see you then.